Hi, friends. Professor Joe here. I hope you all are doing great. Now, I have over a decade of experience in Forex trading, and all these videos that I'm creating is out of my own experience and learnings. In this video, we are going to learn something new in charts and Forex trading. Let's see what is there in this video. Now, in this video, we are going to cover the three types of trends in the markets. That is uptrend, downtrend, and sideways trend. The uptrend is also called as bullish trend. The downtrend is called as bearish trend. And the sideways market is also called as kangaroo trend. We will also be looking at support and resistance, the most important thing in technical analysis. And we will also look at the three types of support and resistance that can be seen on the charts. And at the end of this video, I have a special tip. So please do watch through the video to see the special tip at the end of this video. Now let us see what is the first type of trend. The first type of trend is a upward trend. Let us see how it looks like. Now, in an upward trend, the price is continuously moving upwards. Like you can see in the charts, the price is constantly moving up. It creates higher highs and it continuously keeps creating higher peaks, as you can see in the chart. It also creates higher lows, as you can see in the chart. Trend lines are drawn in an upward direction by connecting the support areas. When we are looking at an upward trend, there is an indicator called as moving average, as you can see on the chart. Here we have used 50 moving average and 200 moving average. Now we will be doing a special video on moving averages in this series. So I am not going to discuss too much in detail about moving average while discussing trends and support and resistance. But yes, moving average also shows us the direction of the trend, like you can see on the chart. So this is how an uptrend looks like. Now, let us discuss the second type of trend, which is called as a bearish trend or a downtrend. Let us see in the chart how a downtrend looks like. In a downtrend, the price is continuously moving downwards, like you can see in this chart, creating lower lows and creating new lows, creating lower highs, like you can see in the chart, lower lows and lower highs. Trend lines are drawn in a downward direction, like you can see on the chart. And moving average also helps us in identifying a downward trend. Like you can see on the chart, there is a 50 MA and there is a 200 MA. This is how a downtrend looks like, and this is how a downtrend is identified. Now, friends, let us look at the third type of trend. It is called the sideways trend or the kangaroo trend. So as you can see in the chart, price is continuously moving up and down without any consistency. There is no clear direction on the chart, nor is it continuously going upwards, nor it is continuously going downwards. Price keeps going above and below the 50 moving average and the 200 moving average. There is no consistency in the direction of the price. When such things happen, we say that the market is in a sideways market, and because the price is moving up and down, like a kangaroo jumps up and down, it is called as a kangaroo trend. As we have already discussed, there are three types of trend, as you can see in the chart. Upward trend, which is a bullish trend, the sideways trend, which is the kangaroo trend, and the downtrend, which is the bearish trend. Now let us look at the next aspect that we should be checking on the charts. The next important thing that we have to look on the chart is for support and resistance. So let us first understand what is a support. Like you can see on the chart, support area is an area at which there is enough demand or buyers. Bulls are waiting to buy at that particular price. Support is also referred as the floor price, as the price is not breaking below that support zone and going down. In a sideways market, support zone will be found around the previous support zone, like you can see in the chart. In an uptrend, the support zone is found at the previous resistance zones, like you can see in this chart. And in a downtrend, the support zone keeps breaking the support and get converting into new resistance zones. Now, there is a lot of debates that happen on support zones and resistance zones. A support cannot be a line, so never draw a line for a support. A support cannot be a fixed price, so don't even look at a fixed price as a support. And some people say that when you're drawing a support, you have to take the body. Some people say that when you're drawing the support, you have to take only the tail. But if you ask me, out of my experience, what I have seen in the market, a support zone should always be like this, like you can see on the chart. In an uptrend, it looks something like this. And in a downtrend, it looks something like this. Means you should cover enough area when you are drawing a support and resistance zone. Do not fight with the market to find a support zone. The support zone has to be easily visible on the charts. Then only it's a good support zone. If it is not visible on the charts, that means the support zone has not yet been created. Now let us look at the next important zone, which is called as a resistance zone. Now let us see how the resistance zone is identified on a chart. Like you can see on the chart, resistance area is a price at which there are enough supply or sellers. Bears are waiting to sell at that particular price. Resistance is also referred as the ceiling price, because if it is a strong resistance, the price will not break that area and go above it. In a sideways market, resistance zones are found around the previous resistance zones, like you can see on the chart. In a downtrend, resistance is found at previous support zones, like you can see on this particular chart. And in an uptrend, resistance are broken and get converted into new support zones. And then the market keeps going up, creating new resistance and new support zones. Like you can see together, all the three types of resistance zones: the sideways resistance zones, the uptrend resistance zones, and the downtrend resistance zones. We have now understood that in the markets, there are three types of trends: uptrend, that is the bullish trend; downtrend, that is the bearish trend; and sideways trend, which is the kangaroo trend. And then we have support zones and resistance zones. Now, when we talk about support zones and resistance zones, there are three types of support and resistance zones. So let us see the three types of support and resistance zones. The first type of support and resistance zone is called as a structure support and resistance zone, like you can see on the chart. Number one, there is a clear uptrend. And in this uptrend, you can see that the previous resistance is getting converted into a new support zone. When you are looking at a structure support and resistance, 200 MA is preferred to be used. A structured support and resistance is normally seen when the market is gradually moving upwards or downwards. Now, let us see how a structured support and resistance looks in a downward trend. Like you can see on the chart, you can see the 200 MA moving downwards. And here you have two examples. The first support zone getting converted into a resistance zone. And as you see, the market goes down. The second support zone gets converted into a resistance zone. So this is the first type of support and resistance, which is called as structure support and resistance. Now let us look at the next type. The next type of support and resistance is called as trend line support and resistance. A lot of people normally call it as a trend line. But again, I want to clarify, it is never a trend line. It is always a trend zone. So that is why, like you can see on the charts, I have drawn two lines, creating a zone for a trend zone. Like you can see on the chart, in an uptrend, there will be a clear trend which can be seen. Like you can see over here, there's a clear uptrend. And then you connect the support zones with two trend lines. So the first trend line you will draw a little bit above the support bottom. And the second trend line you will draw a little below the support bottom. So this is how you will create a trend zone. So it is no more a trend line, it is a trend zone. So like you can see on the uptrend, there is a zone that is created. And when the price comes into that zone, the chances are there it will bounce back. So this is called as a trend line or trend zone support and resistance for an uptrend. Let us look at a trend zone support and resistance in a downtrend. So number one, there has to be a clear downtrend. Number two, you draw two lines. One, a little bit below the resistance points. And the second line, you draw a little bit above the resistance points. This way, you get a trend line zone. And whenever the price enters the trend line zone, you know that the price can go down from there. So this is the second type of support and resistance, the trend line zone support and resistance. Now, let us look at the third type of support and resistance, which is called as dynamic support and resistance. For a dynamic support and resistance, you have to use two moving average. Now the combination can be 10 and 20 moving average, 25 and 50 moving average. In this particular example, I have taken 100 and 200 moving average. So like you can see on the chart, in a sideways, you will never find, like you can see on the charts, in a sideways market, you will never find a dynamic support and resistance because the price will always cross both the moving averages and keep going up and down, keep jumping like our kangaroo. Yes, because it's a kangaroo trend, you will never find a good dynamic support and resistance in a sideways market. In an uptrend, the 100 MA has to be above the 200 MA. When the price goes above the 100 MA and then comes back into the zone between the 100 MA and the 200 MA, it is called as a dynamic support and resistance uptrend zone. Now, like you can see in this second chart, it is a downtrend. When the price has gone below the 100 MA, now you can see the blue line is a 100 MA. When the price goes below the 100 MA, comes a little bit above the 100 MA, but still remains below the 200 MA, you can say that it is a dynamic support and resistance zone, or you can call it as a dynamic resistance zone. From here, the price will again go back down. So this is dynamic support and resistance zone. Support and resistance is something that you have to learn to draw and understand. But as I told you, I will give you a tip. So let us go to trading view and I will show you two indicators that will help you identify support and resistance zones, that is number one, in a structured form and in a dynamic form. Okay friends, like you can see on the chart is plain chart. It is a Euro USD chart. And I have already put dynamic support and resistance here as my favorite. So, and you can see dynamic support and resistance is already there on the chart. But when you are using dynamic support and resistance, you will have to do some minor adjustments. Okay, like in our example, we used 200 MA and 100 MA. So here we go to the settings and we will change the settings to 200 and 100. So what I will do is I will change the DSR 1 EMA length to 199, which is very close to 200, and I will change the DSR 2 EMA to 100. So like we discussed in our example, 100 EMA and 200 EMA. So that is exactly what I'm going to show you over here. So there you go. So you have 200 EMA on top and 100 EMA on the bottom, and this zone, this red color zone or the dark peach color zone is your dynamic resistance area because the market is in a downtrend. Okay, so the price is coming close to it and then going down. Support area got converted into resistance area, again got converted into the resistance area, and there is a dynamic resistance area also over here. So the market has been in a pretty long downtrend, and there you go. So in this case, what has happened, the market is in a very strong uptrend. So 100 and 200 will not work over here. When the market is in a strong uptrend, then as I said, you will have to go with a lower EMA. So example, if we change it over here, let us change it to 25 and 50. So I will make this 50. I will make one EMA as 49, which is close to 50, and the second one I will make it as 25. And I press OK. You see, when the market is in a strong uptrend, 25 and 50 EMA dynamic support and resistance work very well. So I have shown you example of dynamic support and resistance and an indicator that is available for free in TradingView. Now the second type of indicator, which is for structure support and resistance. Now as I told you friends, it is always better that you learn to draw the support and resistance. But initially if you find it difficult, then in that case you can use this indicator. It's a very useful indicator. Go to indicators and you go to support, resistance, channel, zones, multi-time frame. Now the advantage of this indicator, I will just show you. I am currently on a 1 hour chart and it is showing me a support and resistance. Sorry, it is showing me support and resistance of a 1 day. You can see over here. Now this I can change to a 4 hour because I prefer trading on a 4 hour support or resistance, or say a 2 hour support and resistance. Let's put 2 hour because it will be easily visible in a 1 hour chart. And I do not want this chart visible over here because it is distracting my view, so I can remove that. Okay, so I removed that, and when I click OK, you can see that the indicator is automatically drawing resistance and support zones. So the zone which I drew earlier was over here, this one over here. Okay, and even this indicator is showing this support area and this resistance area over here. So friends, these are two indicators which I told you, I promised that I will show you. So I've shown it to you. Use it and make great profits in Forex trading. So friends, like you have seen in this video, we have understood these following things. Number one, trends. Three types of trends: bullish trend, uptrend; bearish trend, downtrend; kangaroo trend, sideways trend. We also understood what is a support zone and what is a resistance zone. We also understood that there are three types of support and resistance zones. One is the structure support zone and resistance zone. The second is the trend zone, which is an upward or a downward trend zone. And third is a dynamic support and resistance zone. And I also shared with you how you can identify a dynamic support and resistance on TradingView and a structured support and resistance on the TradingView. If you really want to master support and resistance, which is the most important aspect of trading, especially in Forex, in fact, in every single market, whether it is cryptocurrency, whether it is the stock markets, whether it is a commodity markets, even for option trading, you have to master the art of finding support and resistance zones. And that can be done only through practice and continuously drawing support and resistance zones with your own hands. And once you master support and resistance, there is nothing that can stop you from becoming a successful trader and an investor. Friends, I have also written a book, Traders You Can Win, but First Learn to Lose. In this, I have explained support and resistance in detail. Also, I have explained two trading strategies in detail in this particular book. If you are interested in buying the book, you know where to find it: Amazon, Kindle. Secondly, if you love the content that I'm creating, please like this video and share this video, so the video can reach to more people who are really looking to learn support and resistance, or say all the aspects of Forex. And to continuously get updates on Forex, finance, fundamental analysis, and also personality development, please subscribe to my channel, Professor Joe, your trading mentor. All I can say is keep learning, keep growing. Thank you. Namaskar.